Good morning, all you magnificent melonheads of the world. Happy Tuesday, everybody. Today is August 19th, 2025. And our top story this morning is Intel. Intel times two. We got two big headlines from Intel yesterday. Initially, it started to sell off a little bit on the first story, and then it ripped on the second. So we've been talking a lot about Intel over the last few weeks, days, months, years. The stock has really just been in the doghouse. Intel, Taiwan Semiconductor has been eating their lunch for years. That's not really news. Intel's earnings were very much lackluster. Their CEO came out and said, hey, there's no more blank checks. We're going to cut back our spending on everything, which is pretty ironic because we had this whole thing in the United States called the CHIPS Act, and we were supposed to be like rebuilding our domestic manufacturing, building this big plant in Ohio. Oh, yeah, we're going to manufacture semiconductors in the United States. Years later, we're all still looking forward to that. We haven't really seen a lot of progress. And so the story broke last week that the government was going to be taking out a stake in Intel. And of course, a lot of people were talking about nationalization. This looks an awful lot like communism. That's only because it does. And, you know, people wondering what's the end result of this going to look like? There was very few details. Well, we got some detail yesterday. Again, it's all anonymously sourced. People familiar with the matter, you know, there's that guy again. But it looks like the government is considering buying a 10% stake in Intel. And the more important detail, in my opinion, besides the fact that that 10% stake may have been a little bit smaller than the market was hoping for, but they're converting CHIPS Act grants into equity. That's kind of the big details. It's not new money. This is money that had already been dog-eared for subsidizing projects domestically here, you know, manufacture in Ohio. This big fat chip fab in Ohio has been the goal all along. And well, the market initially didn't like that news. Instead of the CHIPS Act funding, you know, based on milestones being met and certain payments along the way, no, we're just going to buy a whole bunch of the stock. Then came the news shortly after that, a few hours later, that Softbank was joining in. That Softbank is going to take a $2 billion stake in the company. And, well, Intel stock rallied on that news. And that's kind of interesting because $2 billion, not a huge amount of money. I mean, to us it is, but it's not a massive stake in Intel. I guess it's enough to send the stock higher. But it was viewed as a vote of confidence. And so there's Masa-san, you know, he's always very quick to promise things and throw lots of money around, money he doesn't always have. He's somehow promised to spend $500 billion on Project Stargate that he doesn't have, but that's a whole other story. But these two things combined, Intel stock is higher this morning. Now, I got to question this, though. Are we ever going to get chips manufactured in the U.S.? Because that is supposedly the stated goal here. That was the stated goal of the CHIPS Act. And here we are 3 years later since the CHIPS Act was passed. I think it's been a little more than 3 years. And we are not much closer to having any domestic chip manufacturing here in the United States. Maybe we're a little closer. There's some stuff going on in Arizona. But this Ohio plant is basically stalled here. And now the government's going to give them the money, but without those strings attached, like the milestones being met in order to trigger the payments. Is that going to get Intel to move any faster? Is SoftBank's $2 billion investment going to get them to move any faster? Or are the executives going to say, thanks for buying our stock, we're going to increase our bonuses, and still not going to manufacture in the United States? At the end of the day, this is supposed to be a national security endeavor. This is about getting chip manufacturing domestically, because everything in the U.S. arsenal that goes boom has a semiconductor in it, and all of those semiconductors are either made in Taiwan or China. Plenty of reasons why that's not a good idea for us. So that's the big one going on this morning. Intel's looking pretty good. The other story, we got a couple of stories about the housing market, in particular Home Depot earnings. It was a double miss for Depot, missed on the earnings and on revenue. Their comparable store sales or same store sales were up 1%. That's not even keeping pace with inflation, not even close, actually. So, you know, that's 9 out of the last 11 quarters where the comps have been negative. Only 2 out of the last 11 were they positive. This most recent one being one of the positives, it was only up 1%. Look, guys, the housing market, it's just frozen here. It's stuck in a rut. It can't move. And, you know, people are not having big projects done. People are not moving. They're not buying new houses. And so they're not painting the bedrooms the new color, all the things that come along with moving. And Home Depot's earnings are reflecting that. And we'll probably get the same thing from Lowe's tomorrow. And then on top of that, we got this story from the National Association of Home Builders yesterday. Their home builder sentiment was released. Excuse me, guys. I'm still fighting a sore throat. Home builder sentiment ticked down again. That is 16 consecutive months that the NAHB home builder sentiment was in negative territory, citing weak demand. Surprise there. 37% of home builders cut their prices in the last month. 66% are using sales incentives. And it's that sales incentives. That's one of those, the Flores price discovery things that's going on. They can't move new homes because the prices are too high, the interest rates are too high. So they're offering sales incentives where they leave the price, up at nosebleed levels, but we'll buy down your interest rate for the first year or the first 2 years. Which, by the way, if that looks a little bit like an adjustable rate mortgage, that's only because it is. It's all right. Adjustable rate mortgages worked out great during the last housing bubble. I'm sure it's going to work out great for the people buying new homes this time around. But it goes to show you that they're doing all these fancy games and jumping through all these hoops to keep those comps high. They're doing everything they can to avoid lowering prices, and it's not working. The homes are not selling. And all of this is basically predicated on the fact that any day now, the Fed is going to ride to the rescue like the Millennium Falcon knocking Darth Vader out of the Death Star trench. Yahoo, there's our quarter basis point rate hike. You're all clear, kid. Now let's blow this thing and go home. It's not going to work like that. Interest rates are probably going to go the other way when the Fed cuts. So I don't really know what the housing market is waiting for here, avoiding price discovery at all costs. And you can see it in this other headline out of Canada. Tres Capital, that's a name I'm not even familiar with. They're not that big of an outfit. It's like $5 billion in assets under management. But Tres Capital has halted redemptions on 5 of their real estate funds. 5 different open-end real estate funds can't have your money back if you invested in them. So that's just a reminder about this whole commercial real estate thing that's going on in the sidelines. Oh, yeah, remember that? Every day, some guys on CNBC calling a bottom in commercial real estate. It's been like that for 3 years now. Well, investors being locked out on 5 different funds, or should I say being locked in 5 different funds. Is that a good thing? Is that a sign of the bottom being in? Or is that a sign of another institution that is desperate to avoid price discovery? Investors want their money back, but you'll find if they sell those assets, they won't have enough money to give their investors their money back, or they'll crash the price of those assets. And so they're just saying, no, can't have your money back. You're stuck with us. Again, real estate market, both housing and commercial, frozen solid, just nothing's moving. The few things that are selling in the commercial side are selling for pennies on the dollar. It's pretty ugly out there. Now, we also have some movement in Europe this morning. This is kind of interesting. European defense stocks are selling off this morning. Prospects for peace are bad for business, apparently, for European defense stocks. We had our meeting in the Oval Office yesterday, and it went well as could possibly have been expected. No ceasefire deal. I don't think anybody was expecting a ceasefire deal, at least nobody reasonable. But there was no circus. There was no sideshow. There was no blow up between world leaders. Everybody played nice in the sandbox. And World War III didn't break out. And there are more talks, more meetings in the works. I think that's as good as we could possibly have hoped for. So is this going to result in a ceasefire and the end of the killing? Not yet. Hopefully we get there soon. European defense stocks don't like that. Well, that's too bad. Apparently peace is bad for business for some people. Look, we still got a long way to go. You still have to get the Ukrainians and the Russians in the same room. That is a feat unto itself. Then you've got to get them to agree on something. They can't agree on what time it is right now. So still a long way to go, but at the very least, another step in the right direction. That's 2 in just a couple of days. We've also got metal tariffs are going into effect, and the Trump administration dropped a bomb on our customs people late last night. They expanded the population of steel and aluminum items that are subject to tariffs by almost 400 products, everything from baby strollers to chemicals and all kinds of things. Just a mess in the tariff world. We'll find out if the customs people are able to work through that. We got the Air Canada flight attendants are going back to work. Some interesting things in the article, though, about that one. I think there's probably more going on than they're telling us with that Air Canada strike. And last but not least, the story, I just love this one. Chamath Palihapitiya is back. He's launching another SPAC. And this article in Market Watch this morning, I tell you guys, the first sentence in this paragraph just cracked me up. I haven't laughed this hard in quite a while. So stick around to the end of the show for that one. Yeah, Chamath is launching another SPAC. Oh boy, what's the worst thing that could happen? Don't answer that. Guys, we got a lot to talk about. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance this morning. Hey, don't forget that like button. And for you new guys, hit that subscribe button. Come on back tomorrow. Have your coffee with the melon heads because we do this every single day. And right now, the stock market is negative by 6 points, 0.1% lower for the S&P 500. All right, it's in the red, but just barely. The Dow, meanwhile, is higher by 94 points, 0.21%. Not sure what's driving the Dow. Anytime I see the other indexes down and the Dow is up, I want to say United Health, but I don't know that for a fact right now. And the NASDAQ is NASDAQ is lower by 54 points, or about 0.25%. So we got 2 out of the 3 indexes are in the red this morning, hence the bear thumbnail. Looking over at the U.S. dollar, we've got the Dixie is down by 6 basis points, essentially unchanged, 98.11 for the U.S. dollar. Looking over at the bond market, we've got yields are lower again this morning. The 30-year Treasury is at 4.916. That's off by 2 points, 2.5 points. The 10-year is at 4.318. That's off by 2 points and change. The 2-year is at 3.752, lower by 2 points. And the 1 month is lower by a point and change at 4.343. Looking over at the commodities board, we got a lot of red this morning. Gold is down just barely, off by about 70 cents here, 0.02% lower, $3,332 for spot gold. Spot silver was positive for most of the morning. It just swung negative as well, down by about 6.5 cents, $37.95 for spot silver, below that $38 threshold, down by about 0.2% this morning. But as always, I like the shiny. We've got copper is off by about 0.6%. Platinum and palladium, the lone risers this morning, both in the green. Platinum is higher by 1.1%. Palladium is higher by 0.4%. And oil is lower as well. West Texas Intermediate October futures at 61.82. That's down by about 88 cents or 1.4%. Checking in on Bitcoin, another rough morning for Bitcoin, $115,583 is priced on Coinbase, off by another $700. And importantly, we are below the 50-day moving average. Watch that level there, guys. We bounced off it yesterday. That was looking like a good candle, but we're selling off again this morning. We also bounced off of that a couple of times a few weeks ago. So watch that level. If it doesn't hold, well, not good for Bitcoin, but we have held a couple of times before. All right, now let's talk about this Intel story. Intel CEO draws support for revival from Softbank and Trump. All right, is that enough to pull Intel out of a ditch? I don't know. But less than 2 weeks after President Trump called for the ouster of Intel CEO Lip-Bu Tan, the CEO has a shot at securing billions of dollars in fresh capital that could help him turn around the troubled U.S. chip maker. And I mentioned this a few days ago. I don't know what the hell they talked about at that meeting, but President Trump went from, I demand Lip-Bu Tan resign, he's a Chinese double agent, to what a great story, heck of a guy. You know what? I'm going to invest $10 billion of the taxpayers' money in his stock. What the hell did Lip-Bu Tan possibly say at that meeting to cause a 180 like that? I guess we'll just have to let our imaginations run wild there. But the Trump administration is in discussions to take a stake of about 10% in Intel, possibly by converting grants made to the company under the U.S. CHIPS and Science Act into equity. According to people familiar with the matter, that could allow Intel to tap about $10 billion in capital as Tan works out a strategy for revival. In another surprise, Softbank agreed to take a $2 billion stake in Intel as the Japanese company seeks a broader role in the artificial intelligence boom. Founder Masayoshi Son already owns a majority stake in chipmaker ARM Holdings and laid plans to compete with NVIDIA in AI chips. Intel's chip-making skills could help Softbank manufacture chips to run and possibly train AI models like ChatGPT. Let's see. The Trump administration is particularly focused on shoring up Intel's sprawling project in Ohio, home state of Vice President J.D. Vance. Intel has repeatedly delayed the anticipated opening of that site, which the company originally envisioned as the world's biggest semiconductor facility. And that's the rub right there. This chip plant in Ohio, are they going to build it? All right. We promised them all these grants under the CHIPS Act. There was all these milestones. You'll get the money when you do this, then you'll get some more money when you do that. Now we're saying, forget all that. We're just going to buy a huge chunk of their stock. Is that going to result in this Ohio plant actually getting built and operating? That's the big question. If we don't get some kind of guarantee of that or some kind of fail-safe to ensure that happens, then this is just gambling the taxpayers' money on Intel stock. So that's the rub there. Will that happen? Won't it? I don't know. Either way, Intel stock looking pretty good this morning. Let's refresh this, get an accurate read. Up 5%. It was up 7% late yesterday. $24.85, up about $1.20 for Intel shares. All right. Meanwhile, let's talk about Home Depot. It was a miss on the top and bottom. Home Depot maintains full-year forecast even as it misses on earnings for the second straight quarter. Home Depot stuck by its full-year outlook on Tuesday, even as the company came in slightly shy of Wall Street's expectations for quarterly earnings and revenue. The home improvement retailer reiterated that it expects full-year total sales to grow by 2.8% and comparable sales, which take out the impact of one-time factors like store openings and calendar differences, to rise about 1%. However, it missed Wall Street expectations for the second straight quarter. Earnings were $4.68 adjusted versus $4.71 expected. Revenue of $45.28 billion, shy of $45.36 billion expected. Looks like in the 3-month period ended August 3rd, Home Depot's net income was $4.55 billion, or $4.58 a share, down slightly from $4.56 billion or $4.60 a share in the year-ago period. Revenue rose almost 5% to $43.18 billion. Home Depot's results reflect that the company is still waiting for a greater pickup in home improvement activity, whether spurred on by higher housing turnover, lowered mortgage rates, or consumers' own shift in mentality. And that paragraph pretty accurately sums up the situation for Home Depot. You've got no housing turnover. The market it's not crashing, it's just frozen. They want lower mortgage rates. So far, the Fed has been reluctant to give it to them. And consumers' mentality, well, it just sucks. The consumers are tapped out because of inflation. None of that is good for Home Depot. And yet everybody's like, well, my Fed rate cuts are going to save the day. Just wait for it. But meanwhile, comparable sales increased 1% across the business and 1.4% in the U.S. during the fiscal second quarter. Home Depot said foreign exchange rate negatively impacted the company's comps by about 40 basis points. That comparable sales growth marks only the second quarter out of the last 11 and Home Depot has reported year-over-year improvement. Guys, things at Home Depot just not that good, directly tied to the housing market, although it looks like some of that negativity already priced in. The stock is actually up 2.25% here, $403.32, higher by $8.80 on an earnings and revenue miss. Interesting. Meanwhile, let's talk about this NAHB. The National Association of Home Builders came out with their sentiment report yesterday, and it was another bad one. Home builders boost sales incentives to 5-year high as they struggle to sell newly built homes. Wait a minute. This can't be right. I was told there's a housing shortage. If there's a housing shortage, why is there a struggle to sell newly built homes? Something doesn't work here. Shortages means the stuff you make sells right away. So we don't have a shortage. We have prices that are too high. But I digress. The numbers. Confidence among home builders ticked down in August as home buying demand remains weak and builders are throwing more sales incentives at buyers to boost sales. Builders' sentiment in the market fell in August from the month before. Sentiment was glum as builders face weak demand as well as challenges associated with developing land and building homes. The National Association of Home Builders Monthly Confidence Index fell in August to 32. A year ago, the index stood at 39. Builder sentiment had been in negative territory for the last 16 months in a row, the NHB noted. Persistently high mortgage rates and high home prices are keeping buyers away from the market. The pace of home sales remains depressed as many buyers can't afford to enter the market. The 30-year fixed-rate mortgage was 6.58% as of August 14th, according to Freddie Mac, and the median home price, $401,800. In August, 37% of builders cut home prices. Just over a third are cutting their prices, but that's down from 38% in the previous month. But the average price reduction was 5% in August, unchanged from the previous month. The use of sales incentives, on the other hand, grew to 66% in August from 62% the previous month. The share of builders offering incentives reached the highest level since May of 2020, The NAHB said sales incentives include offering mortgage rate buydowns where the builder temporarily offers a lower rate to the buyer for a set period before it adjusts upwards. And, well, you guys may recall adjustable rate mortgages. They played a huge role in the GFC and the housing bubble collapsed last time, but I'm sure this time around it is going to work out great. These are the things they're doing, guys, buying down mortgage rates, offering all these different incentives to avoid lowering their prices, because the second they lower their prices, then they need to mark down all of that unsold inventory that they're sitting on, and then they report a great big negative number in their next quarter. And, well, we can't have that, not when my stock bubble is still ripping. But home builders are in bad shape here, guys. And if we really did have a housing shortage, the home builders would be ripping. We don't have a housing shortage. The prices are just too damn high because of all the silly financialization and the Fed and their holdings of mortgage-backed securities and all these FHA loan workouts and all this other crap that's going on, which, by the way, is coming to an end soon. Meanwhile, we got one more housing-related story. Trez Capital halts redemptions across 5 real estate funds. Trez Capital suspended redemptions across 5 funds as the private real estate manager works through elevated withdrawal requests from investors, ongoing loan funding needs, and debt workouts. Well, elevated withdrawal requests, people want their money back. Loan funding needs, they're having a liquidity crisis. They can't borrow more money. And debt workouts, meaning the people that owe money to them aren't paying them. Well, I'm sure that's all just great for Trez Capital. Trez didn't provide a time frame for when investors will be able to receive their money, but said the effort was intended to protect all unit holders and ensure orderly management of the funds, according to a statement. The freeze covers the Trez Capital Prime Trust, the Trez Capital Yield Trust, the Trez Capital Yield Trust USCAD, Trez Capital Yield Trust USD, and Trez Capital Private Real Estate Fund Trust. The firm said no other funds are affected. Just basically, if it's got Trez Capital and Trust in the name, you're probably hosed, apparently. The firm is also evaluating the strategic alternatives aimed at supporting long-term growth and said it will update investors as those efforts progress. Whenever I hear strategic alternatives discussed in this context, it usually involves something like restructuring debt, something like investors taking a haircut, defaults, bankruptcies. I don't know. But strategic alternatives, yeah, I'm sure they poll very well in focus groups. But me, I get the hair in the back of my neck sticks up when I hear that one. Guys, this is just another indicator that these assets not worth what they claim they are. When people say, no, you can't have your money back because we don't want to sell these assets because we don't like the price we're going to get for them, that means that their marks were not accurate to begin with. We saw this. Blackstone did this for years back in 2023. Last year, they finally did start resuming redemptions, but only after several months of lockouts or lock-ins. All right. Also, we got European defense stocks slide on a push for peace in Ukraine and Gaza. Peace could break out at any moment. European defense stocks tumbled on Tuesday as Donald Trump's renewed push for peace in Ukraine and an agreement by Hamas to a truce deal in Gaza put the brakes on their powerful ally. What? Possibly a truce deal in Israel too? Well, what has happened? What happened to this world? A Goldman Sachs Group basket of European defense stocks dropped as much as 5.7% after the news. In Germany, tank and ammunition supplier Rheinmetall slid as much as 4.9%, while gearbox maker Renk Group hit its lowest since May. Defense shares are pulling back further from June record highs as Trump increases his efforts to broker an end to Russia's war in Ukraine. President Putin and President Zelensky are being urged to hold a one-on-one summit, followed by a trilateral gathering involving the U.S. leader. Just want to emphasize, guys, that they are only being urged. Nobody has agreed to anything yet, but just the fact that, all right, Trump talked with the Russian guy, things went okay. Trump talked with the Ukrainian guy and the Europeans, things went okay. At the very least, they didn't get worse. Hey, that's optimistic. Maybe there's a chance here, and European defense stocks are reacting to that. Meanwhile, we got more news in metal tariffs. This is kind of interesting. Trump widens metal tariffs to target baby gear and motorcycles. Targeting baby gear and motorcycles, that's some pejorative language there, to say the least. But case in point is they're just dramatically expanding the population of goods subject to those steel and aluminum tariffs. President Trump stunned the logistics industry on Friday by widening his steel and aluminum tariffs to include more than 400 consumer items that contain the metals, such as motorcycles and tableware. All right, tableware tariffs. That's going to solve our national debt crisis. What is it, $37 trillion? Yeah, we'll just tariff tableware. Should solve the problem. Customs brokers and importers in the U.S. were given little notice to account for the change, which went into effect Monday and did not exclude goods in transit. The new tariff inclusion list was posted by the Customs and Border Protection Agency just as many were leaving for the weekend and appeared in the Federal Register on Tuesday, creating fresh headaches for trade professionals. Yeah, Peter, we're going to need you to go ahead and come in on Saturday to work on these new tariff inclusion lists. That'd be great. Official guidance has been muddled, especially for goods already on their way to the U.S., and it's unclear whether the metal levies stack on top of country-by-country tariffs. The new list includes auto parts, chemicals, plastics, and furniture components, demonstrating the reach of Trump's authority to use sectoral tariffs. That is separate from the executive power he invoked for his so-called reciprocal tariffs. Basically, if it's shiny, metallic, or remotely related to steel or aluminum, it's probably on the list, said Brian Baldwin, a vice president of customs in the U.S. at logistics giant, oh man, I can't pronounce that, Kuhn and Nagel International, wrote in a post on LinkedIn, this isn't just another tariff, it's a strategic shift in how steel and aluminum derivatives are regulated, the guy said in a sentence that was almost certainly written by AI. If they're not this, but that is a pretty common thing we see from these guys, from the large language models in their writing. Anyway, guys, seems like steel and aluminum tariffs now apply to much more other than the raw metals. This is an interesting one in Fortune. MIT reports that 95% of generative AI pilots at companies are failing. Let me just get this out of the way. I hope MIT was a little more thorough in checking their sources with this report than they were in that report about how AI was inventing all these new materials in a study that turned out to be entirely fake. But here we go. Companies are betting on AI, yet nearly all enterprise pilots are stuck at the starting line. The Gen AI Divide State of AI in Business 2025, a new report published by MIT's NANDA initiative, revealed that while generative AI holds promise for enterprises, most initiatives to drive rapid revenue growth are falling flat. Despite the rush to integrate powerful new models, about 5% of AI pilot programs achieve rapid revenue acceleration. The vast majority, however, stall, delivering little to no measurable impact on P&L. The research, based on 150 interviews with leaders, a survey of 350 employees, and an analysis of 300 public AI deployment, paints a clear divide between success stories and stalled projects. Some large company pilots and younger startups are really accelerating with generative AI, said Chalapali. Startups led by 19 or 20-year-olds, for example, have seen revenues jump from 0 to 20 million in a year. It's because they pick one pain point, execute well, and partner smartly with companies who use their tools. But for 95% of companies in the data set, generative AI implementation is falling short. The core issue, not the quality of the AI models, but the learning gap for both tools and organizations. While executives often blame regulation or model performance, MIT's research points to flawed enterprise integration. Generic tools like ChatGPT excel for individuals because of their flexibility, but they stall in enterprise use since they don't learn from or adapt to workflows, Chalapali explained. In other words, out of all these companies and all this money they're throwing at AI, very few of them are doing anything with it. 95% of these projects are failing. But you know what? Hey, just pump another $500 billion in CapEx into this. Any day now, these companies are going to start making a profit. Never mind the power restrictions, never mind the accounting fraud, never mind the illegal exports to China, never mind the fact that nobody makes any money. And now even the companies that are using these tools are not making any money with it. But still, it is the greatest thing ever to happen to humanity since Prometheus gifted upon us fire. Yep, it's the new fire. They've actually said that. Not the Prometheus thing, but they did call it the new fire. Meanwhile, this was an interesting one. Air Canada and the union reach a deal to end the strike after overnight talks. This is kind of interesting, guys. We talked about this yesterday, how the union had defied an order from the government to go back to work, saying, no, they can't fire all of us. Well, now they've reached a deal. Air Canada reached a deal with flight attendants to end a 3-day walkout that led to mass cancellations during the busy summer season and forced the country's largest airline to withdraw its financial outlook for the year. The accord was reached early Tuesday after a mediated negotiation session that lasted more than 9 hours, the union's bargaining committee said in a post on its website. The strike has ended, the union said, addressing members. We have a tentative agreement we will bring forward to you. Neither side offered details of the tentative agreement, which the union said was reached at 4:23 a.m. local time. We are required to advise our membership that we must fully cooperate with resumption of operations, the union said. And as always, there's something good lurking, or there tends to be something good lurking at the end of a Bloomberg article. Look, no details about this agreement other than that the agreement was reached at 4:23 a.m. local time. And everybody knows the best decisions are made at 4 o'clock in the morning, right? Anybody ever make a decision at 4 o'clock in the morning and then a few years later look back on that and say, wow, that was a really smart thing to do? No one ever. I can tell you when I was in college, I did some really stupid things at 4 a.m. in the morning, but I digress. But it's that next paragraph. We are required to advise our membership that we must fully cooperate with the resumption of operations. We can't tell you anything about this deal that we made at 4 o'clock in the morning, but we have to tell you guys that you have to go back to work. Somebody's got a gun to their head, either figuratively or literally. I don't know what happened at this meeting, but there is a lot that is not being said here. No details about this. All I can tell you is that the government ordered them to go back to work. They defied that order. Something happened at this meeting in the middle of the night that all of a sudden the union is saying, guys, we have to go back to work. We can't tell you why, but we all got to go back to work. And now for the most hilarious story of the day. Chamath Palihapitiya warns no crying in the casino as he launches another SPAC after a string of failures. And oh my God, this is such a what stage moment. I love this story. In particular, this first sentence. Chamath Palihapitiya has carried out what some might consider to be a threat. Launch a new special purpose acquisition company, despite a checkered record in doing so. What some might consider to be a threat. That cracked me up. Who wrote this article? This is written by Steve Goldstein. Steve Goldstein, thank you, sir. That was freaking hilarious. In a Securities and Exchange Commission filing, Palihapitiya detailed what will be called the American Exceptionalism Acquisition Corp., which is incorporated in the tax haven of the Cayman Islands, because, you know, all good and totally legitimate and not at all fraudulent business takes place in the Cayman Islands, right? It's definitely not a safe haven for corruption and criminality. Certainly not. The new SPAC will seek out to merge or buy a company in the field of energy production, AI, decentralized finance, or defense, whatever bubble stock may happen to come along. But it's what was in the S1 filing that was so hilarious. We believe that retail investors should only participate if A, the investment is a small part of an otherwise diversified portfolio, B, this investment is a quantum of capital they can afford to completely lose, and C, if they do lose their entire capital, they will embody the adage of President Trump that there can be no crying in the casino, the prospectus says. Trump is not actually known for saying that, though. It was actually Argentine President Javier Milei who said that when a cryptocurrency he promoted on his social media handle plunged in value. Palihapitiya will also take a 30% promote fee rather than the standard 20%, though it will be conditional on achieving a 50% premium to the IPO price. So he's given himself a raise. That's just lovely. This guy, I'm telling you, this is where money goes to die. All right. Chamath Palihapitiya, this guy makes a ton of money for himself at the expense of investors. Almost every SPAC that he launched failed miserably, lost 90 to 100% of its money. And now he's launching another one with an S1 filing that basically reads like the end of a freaking pharmaceutical commercial. I double dog dare you to invest in this company that's almost certainly to go bankrupt. And the fact that he's doing this now is just a testament to how our market is no longer a source of capital for businesses looking to develop and grow into prosperous businesses. It is just a casino overrun with degenerate gamblers who will buy anything you put in front of them, including things being sold by people whose reputations are so awful that I don't know. They're just really awful. My metaphorical creativity is failing me to describe what a black hole of money destruction this man is. This is a singularity. Not even light can escape the money-sucking death machine that is Chamath Palihapitiya. And he's launching a new SPAC. Oh, boy. Good luck with that one, guys. Probably do better than CoreWeave, but hey. But I digress once again. Hey, I just want to say thank you so much to Mr. Chris Bott. Thank you, Chris, for the super chat, for supporting the channel. He says the U.S. government and Softbank has announced a strategic investment in Pogs, Beanie Babies, Koosh Balls, Magic Cars, and fidget spinners. Hey, let's not forget about Labubu. All right, Labubu, the stupid little monsters in pajamas keychain dolls that people clip on their handbags, including grown-ass men, by the way, because it's fashionable. They're like $80 and you don't even know what you're getting. And the company that makes it is now worth more than Mattel and Hasbro combined. I kid you not. There's really stupid stuff out there people are spending their money on, guys. And then they're like, I don't know why I can't afford a house. Maybe it's because you have a freaking Labubu doll clipped to your belt loop. But yeah, what else we got there? Pogs, Beanie Babies, Koosh Balls, Magic Cards. How about snap bracelets, troll dolls? Why not? Yeah, let's throw some Trump coin in there while we're at it. Yeah, guys, there's just too much money sloshing around in the system. I kid you not. Thank you, Chris, for supporting the channel. And Nacho Man, I've got to be a Nacho Man. Thank you so much, Nacho Man, for becoming a new Melonhead member. Welcome to the Melonhead, sir. I appreciate the support of the channel. Just a reminder, guys, if you are a channel member, you get one free super chat every month. If you use that, I will read and respond to your questions or comments on the air live. Thanks again, Nacho Man. I appreciate the support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Don't forget that like button and that subscribe button on the way out for the YouTube algorithm, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Thanks again, everybody. Thank you also to my Patreon supporters and magnanimous Melonheads on YouTube and Patreon. Links down below, should you feel so inclined. Until next time, live small and dream big.